Welcome. I am Ernie Goss, McAllister Chair in Regional Economics here at Creighton University in beautiful downtown Omaha, Nebraska. Here I'm on the first business day of June, as I'm always here the first business day of every month, reporting on economic conditions for the previous month for the Mid-American region. That's the region that spans from North Dakota, Minnesota, the north, to Oklahoma and Arkansas in the south. So how was it? How was the month of May according to these supply managers in these 9 states? The overall index over growth neutral for the 4th straight month. Now, growth neutral, as you know, the index ranges from 0 to 100. 50 is growth neutral, so it's above growth neutral for the 4th straight month. The overall index was up to 52.1. Now, that's not a strong number. It's about like your chemistry grade in high school, 52.4, 52.1, I should say. Not that good, but it's up from April's 50.1, so that's good. It was up. Now, here I'll bring up a chart that shows there in beautiful Creighton blue, Mid-American. As you see, it had a strong dip there in December, negative dip, and since then it's been trending higher, and that's a good sign. In red you see the national number. That'll come on later this morning. I expect it to be up much like the Mid-American region number, so I expect it up to be probably about 53 to 54, so not strong but better. This economy, the manufacturing economy in the 9-state region in the U.S., is trending higher, but still a bit weaker than we'd like to see. Job index, first time it's been above growth neutral since August of 2015, and that's a good number. The overall index went from April's 45.0, which obviously is not a good number, up to May's 51.4, which is a better number. We asked about what the biggest challenge was moving forward. 26% of these supply managers said finding and hiring qualified workers. Now, that may sound ridiculous to many of you out there, given the weakness of the labor market, but finding and hiring qualified workers is still a big issue. That's for those that are skilled primarily and well educated. And as you know, this labor market, this graduating class that just graduated this month, and that would be in May and June, they're going to see a much better job market than we've seen in prior years. That's the good news. Now, we ask about the Federal Reserve's rate hike, which I expect to be coming forth in June this month, and we'll see what happens. And I'll give you some other indicators to keep an eye on shortly. One fifth expected negative impact from the June rate hike, and another 52.8% expect little or no impact. So you see there now the remaining share of purchasing managers, supply managers, said it could have a positive impact, or they just didn't know what the impacts would be. So one fifth expect a negative impact from a rate hike. Export orders down, but still above growth neutral. That's good. Now, what should you watch for between now and our next meeting, which is July the 1st? That's the first business day of July. Keep an eye on the May jobs report. Very, very important. That comes out on June the 3rd. That's this Friday. Watch for a number that's above 100,000, but particularly above 150,000. 150,000 and 200,000 and above, I expect that's going to push the Fed to raise rates, and that's on June the 15th. Now, keep an eye on the PMIs. That's the Purchasing Management Indices, the ISM numbers, the numbers I just showed you, that come out later on this morning, as I said, for the U.S. Those numbers, if that number is up to 53 to 54, that's going to, again, push the Fed to raise rates, and that means higher short-term interest rates for you and your business. Keep an eye on the core CPI. That's the Consumer Price Index, which excludes food and energy. It's been above the Fed's target of 2%. It was 2.1% year over year last month. That comes out on June the 16th from the Bureau of Labor Statistics. Very important. If that number, now that's a day after the Fed meets or Fed makes their announcement, but they'll know that number. They do share that information. The Bureau of Labor Statistics will share it with Janet Yellen, head of the Federal Reserve. Now, what are the risks? What are some key factors you need to watch for your business, your own pocketbook? The Brexit, that's the Britain exit from the EU, European Union. They vote, that's June the 23rd. Of course, that's after the Federal Reserve meets. That's a very, very, very important vote. I don't know. I don't know if they're going to exit, but if they do exit, that would tend to push up the value of the dollar, push down energy prices, push down agricultural commodity prices, and it would tend to slow the Mid-American region. In fact, it would tend to slow the U.S. economy, but the impacts there would be marginal for the U.S. It'd be more of an impact here in Mid-America. Now, another thing, another risk factor, if the Federal Reserve, Janet Yellen, when she talks about the economy, and that's on June the 15th, they meet 14th and 15th, that's the Open Market Committee to consider rate hikes. If she says this economy is heating up and it looks like she telegraphs that they're going to be raising rates more than one more time, that's a real risk. And it would tend to slow the economy down. It would tend to push up interest rates. Why is she doing it if that's the outcome? Inflation. She fears inflation. She's an economist. I'm an economist. We fear inflation. So what's another thing to keep an eye on? The stronger U.S. dollar. Not good for this part of the country, not good for the Mid-American region. It tends to push down agricultural commodity prices, pushes down manufacturing, and that's what we're surveying. So that's something to be very keen on. Now, how do you keep an eye on that? Watch out for the 10-year Treasury. When the 10-year Treasury yields come down, that's typically pointing to a stronger dollar. Our stronger dollar points to a weaker yield on the 10-year Treasury. Well, that's it, folks. It was a pretty good report. Now, not good enough to jump up and down and get your wallet out and start spending, but still pretty good. The overall index is pointing to positive growth for the 9-state region. I expect the growth to continue moving along positively, and that's a good signal. And I will come back here on July the 1st. I'll be back here July the 1st reporting on business conditions for the month of June for the 9-state region. Until we meet again, may your economic cup runneth over.